India may have the fastest growing major economy in the world, but what about the funds linked to the country's biggest firms? Well, India's economy grew by 7.4% between January and March, easily beating expectations. Asia's third largest economy benefited from strong farm activity, steady public spending and improved rural demand in the last financial year, even as manufacturing and new investments by private companies remained weak. But some of the biggest India ETFs aren't exactly displaying standout performance. Take the largest fund in this space, iShares MSCI's India ETF, or INDA. It's in positive territory, but only just. So why are India ETFs not producing better results? Well, let's talk to JP Lee, project manager at VanEck. VanEck has its own India funds too. JP, well, how would you assess the performance of India ETFs this year so far? Are you surprised it hasn't really been much better?
I mean, I think for people who are worried about how India is doing this year, maybe these are investors who are late to the game, or maybe just entered India. I mean, we had a brilliant run of 3 to 5 year performance over the last couple of years. India was best of the best, I want to say 23 and 24. So for it to have a little bit of a pullback, or it not to be the market leader again for the third year in a row, I think that's fair. And I don't think anybody's expecting India to be top of the pack year after year after year after year, even though I think some of the stuff that you brought up at the beginning would support something, India being top of the pack year after year. So I think this is a normal kind of level set from a performance perspective for these India strategies.
What about the tariff story, JP? How damaging would it be for India ETFs if no deal is done between the US and India?
Well, I think the tariff story has gotten a lot of international, especially emerging markets investors worried, right? And I think India, when you compare it to other emerging markets countries, is in a lot better position because India's economy, it does have exports. There are plenty of companies that are exporting their goods to other parts of the world. But the really exciting part of the India investing story is the domestic growth and the domestic demand. So we've got a much bigger focus on services and domestic consumption compared to, say, a country like China, which is still, yeah, there is a domestic demand component to the China story, but it's still very export heavy. So I'm not a geopolitical prognosticator, but I would just say India is kind of in a good spot compared to a lot of other EM countries because there's so much domestic energy and domestic growth that's happening within the country, but it's not relying on what happens outside the world. It's very domestic driven.
Well, let's look at some geopolitics for a moment. How have the tensions between India and Pakistan affected investing in India ETFs?
So these kinds of short-term, blips and tensions between India and Pakistan definitely do kind of generate some volatility in the short term, but really we haven't seen a lot of long-term effects to India's stock market performance or investment flows into India based on this regional conflict. And I think that in a lot of ways, this has been going on for a while. This isn't like a news story. It's calm. It's calm. It's calm. There's a blip of tension. There's a flare up, and then it goes back to being calm. And that's kind of being priced in already by international investors, global investors. And I think global investors are more focused on what we were just talking about, right? This exciting domestic demand growth story, the structural long-term growth story, than they are about, a regional conflict. That being said, if things escalate and continue to escalate, and then kind of keep going in the wrong direction, that would definitely change. Kind of change the sentiment and probably really increase the volatility. But over the last 10 to 15 years, we've kind of seen this pattern where there's a blip of volatility and it kind of goes away and settles down. So we think it's priced in, and we think investors are more focused on the growth.
Now, when choosing an India ETF, which sectors in particular do you think investors should be looking out for?
I mean, the easy answer is all of them, but we can dig into a couple of them. So financials, to start, when you have a strong domestic economy, you have people starting businesses, you have people getting health insurance for the first time. When you have people getting life insurance for the first time, all these direct-to-consumer financial tech apps, fintech, the finance sector is a great place to go fishing for really strong structural growth stories. Technology, again, there are 850 million people on their mobile phones in India. people are doing business on their phones. They're starting businesses. They're buying things. So the tech sector is also a great place to look. And then anything again that's kind of consumer facing. So consumer discretionary stocks. I think healthcare is an interesting spot. So any place where domestic demand is being met and served is a great place to look across the board. And there's two ways to play it, right? You could say we're going to get diversified and we're going to approach the market one way, or we're going to say, look, we really like tech, so we're going to focus on just the tech sector. But there aren't as many like thematic or sector opportunities if you're looking at ETFs yet.
That was JP Lee from VanEck. And that was your look at India ETFs. I'm Ramzan Karmali, and this is Reuters.